Hey everyone, this is Rob Roy and welcome to the Elliott Wave Elite U.S. Market Update. Taking a look at the charts, you're going to be able to see that we are at a very important juncture in the markets as far as the future direction, or at least the near-term direction. As I mentioned in the past recordings, we have this very defined V bottom here. I'm not a big fan of V bottoms holding because historically they haven't. There's always exceptions to every rule, as you're well aware if you've been following trading for any length of time. But it would be surprising that if we just take off from here without some sort of a retest. Now, right after the V bottom formed, it seemed like everybody, all the market pundits, were looking for a retest. And another rule with the markets is when everybody thinks they're going to do one thing, the markets quite often do the exact opposite. So with everybody looking for a retest with this V bottom, we haven't yet had it. So now we look and we see that the wave 4 retracement here, so this is the corrective move, again corrective move to the upside, but the wave 4 is right around that 61.8% Fibonacci level, which that's the most important fib level in my opinion. So we're right here, and we're also in this whole area of congestion. A lot of people felt like breaking through that area in today's trade would break that area of support resistance and give us an opportunity to move up to the top end of this trading range, and it may very well do that. If it does that, that will likely then disqualify any sort of a further downside pattern out of this Elliott Wave 5 pattern, but too early to tell that yet. Again, because this 61.8% fib level could hold right in this area. So another thing that we'd like to do is take a look at the SPY, let's bring volume into the mix and see what that looks like on these moves. And you can see that in today's trade, we did move to the upside on average volume. And the volume has been drastically dropping off since that V bottom occurred. Lower volume on upward moves is common. You usually have more volume on downward moves, but that's a pretty significant drop off. And with the fact that we've risen on lower and lower volume, that makes you have to be at least a little suspect and at least respect the possibility that this wave 4 holds and that we do end up heading back to the downside. But the next week or two of trade is probably going to tell us an awful lot, and see if we get any sort of follow through from that move to the upside today. We did have the Fed meeting today, and Chairman Powell came out and was just as dovish as he was last time. They actually were doing a little bit of a joke, and he used the word patience in his news conference after the meeting 8 times. So I think he's trying to make sure that the market stays calm and they're not worried about the Federal Reserve raising rates. The big concern was the reduction of the balance sheet, on whether or not they were going to continue that, and they even said that that is open for looking at each week, because he had to use the word autopilot in the past, like nothing was going to stop them from reducing the balance sheet, which works just the same way as raising rates. So with all that calming the market, we had the upside today, and I wanted to have this recording after the Fed meeting to go through those details. Looking at the VIX, another important juncture here. If we look at the Elliott wave pattern on the VIX, you can see that the wave 4 is at 76%, so that nullifies the pattern for a move back to the upside on the wave 5. So is that going to foretell the same thing happening in the market? Possibly. We'll wait and see. But in addition to that pattern being disqualified, we are down here in this huge area of support resistance that's been working since the October volatility spike occurred. So we're right at junctions of moving the market, both with volatility and with the market itself. Looking at TBT with interest rates, as you can see, they've come down and they've stayed down, which is interesting. We got a little bit of a bounce, but boy, you would have thought if this was a good, strong move in the market, as signaling a better economy, etc., that interest rates would have started to go back up and go back up significantly, but they haven't been. Now, that may very well be because of the dovish Fed, but still, just from the fact that there's a viewpoint, or there should be a viewpoint, that the economy is not that bad if the market's going to continue higher, and that should move interest rates up. It just hasn't yet. The dollar did fall down today, and again, the dovish comments from the Fed Chairman Powell, likely the culprit there. Same scenario here as far as the dollar moving back to the upside. The wave 4 is at the 73% level, so that disqualifies the pattern. Looking at the patterns and understanding the disqualifications is very important. And when you look at it, if you put a pattern on where you have a wave 4 that hits the 61.8% level, and it's already now disqualified coming down here, the beauty of trading Elliott wave properly is the fact that you have very small amounts of risk. So if you just follow the pattern, the risk is small, and your stops, basically, mental stops, when those levels are broken, gets you out and back into the newly formed pattern or the relabeling pattern, whichever occurs in the markets, and now you're back on track to generate gains again. And what makes people successful over long periods of time is smaller losses, larger gains. We're all going to be wrong. Everybody's going to be wrong. Elliott wave is wrong sometimes, but the key is be right more than we're wrong, and don't allow large losses to where you have to have too many gains to offset those. Looking at our case studies, GLD broke out. Here's that monthly chart that I showed you with this massive wedge that's really showing a very significant move. It could be over a long period of time, but there's going to be a big move in gold coming, and you can see we broke out of that in today's move. And showing you on the daily chart, you get an even better view of not just in today's move, but in the last few days, gold has skyrocketed to the upside. So our strangle on GLD is nicely profitable at this point in time. TAL, another case study with a wave 3, even when the market was struggling. With this upward move, we haven't had as much of a resumption of the wave 3 as you might like. We got a little bit of a triangle forming here. So some consolidation, triangle, those are the patterns, flats, triangles, and zigzags that you know that show up in the wave 3. And we should get a significant break here. Now the key is going to be, is the break going to come down to the wave 4, or are we going to continue up in the wave 3? Well, the market will tell us, but with that little triangle there, we should know soon. We had that pattern just recently here in the SPX. Same exact thing, and in this case, it broke to the upside. So I take that line off, and you can see, same thing. A small triangle, wasn't very large, but it was a triangle nonetheless, and then look at the breakout that occurred in today's trade. So same scenario going on with TAL. We'll see where that goes from here. Our new case study to look at this week, one of my favorites. This stock shows up in our strangle search all the time. Looking at our directional, Elliott wave directional trades, there just aren't a lot with where the market is right now. So we'll look at when we're at, especially when we're at such a point of inflection where we could go significantly one way or the other. The strangles make an awful lot of sense. They're corrective patterns. Elliott loved corrective patterns, and I do as well. But Autodisk is a very volatile stock. It tends to move. You can see how big this mouth of this triangle is. It's huge, big price range, and because of that, we have to actually go below the 25 delta on the strangles just in order to keep the pricing within our specified risk profile for our case study alerts. But it's still, it'll have enough movement that'll be just fine. But this one has been a good one over the years just because of the fact that it tends to like to move. Now look at just this one day over here. Obviously it was an earnings report, but $21 move in one day there. So this stock can move when it wants to. We went out to April, so we have plenty of time for this to make its move. So hope you've had a great week, and we'll be back to talk to you again next week. Take care, everybody.